the implicit in that claim, which I saw many, many times on Twitter, of like farmers who are very upset that the VCs have what they perceive as being better liquidity terms than they do, which I'm pretty sure is definitely not true. That like, oh, you know, the VCs are going to dump on retail and that's terrible. And like, how could they do this to us? When like, they're sort of assuming that, well, I'm as a farmer, I should get to dump on retail first before the VCs dump on retail, right? But like both people, like it's sort of implicit in that. It's like, no, I want to dump on retail, not you. And we're sort of assuming like retail is some other person who we're both racing to fuck faster. And I'm like, I just think like that's kind of a warped mental model of what we're doing here. Like if you think that, then like, why are you farming? Like, why are you doing any of the, why are you pointing fingers at anyone else? It's sort of like no honor among thieves kind of mindset.
Not a dividend.
It's a tale of two clans.
Now your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Robert, the crypto connoisseur and czar of Superstate.
Good morning.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
And finally, I'm Haseeb, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So, as they say, there are some years where nothing happens and there are weeks where years happens. And this feels like one of those weeks where just so much shit has happened over the last couple of weeks. So we're going to go ahead and jump straight into it because there's been so much content and we were just, you know, before the show started, we were already getting into it. So I want to make sure that we have enough time and bandwidth to talk about everything that's on the docket this week. So the first thing on the week, not even necessarily the biggest story, but probably the one on which we're going to have the most disagreement, let's say, is EigenLayer. So EigenLayer, I should caveat that, so we are very small investors in EigenLayer. I think Robot Ventures, bigger investors in EigenLayer since you guys invested
Also
very early. Okay, maybe
smallish.
Relatively, on a relative basis.
Size is not size.
Yeah. Exactly. Anyway, okay. So everyone here on stage is an EigenLayer investor, but to varying degrees. So EigenLayer, they're a restaking protocol on Ethereum, whatever. You don't need to explain what it is. They had $15 billion that were staked through EigenLayer or restaked through EigenLayer from people all around the world. And it was very highly anticipated that there was going to be a massive airdrop from EigenLayer that was teased through their points program. So we got the airdrop and the internet was not happy. So now why was the internet not happy with the airdrop? So the airdrop in absolute terms was about 5% of the total token supply. Now this in and of itself was not that far out of market. The declaration was that 15% total is going to be airdropped over multiple seasons. But the reason why people got really upset was a few things. One, a very large combination of both team and investors. So north of 50% of the total supply is owned by team and investors collectively. Second, the tokens are non-transferable. So initially what they said was that we're going to give you the airdrop, but the tokens will become transferable once there's sufficient decentralization. This is perceived as being a kind of regulatory hedging because, of course, if the tokens are tradable before there is sufficient decentralization, it risks being an unregistered security. The third thing, and this seems to be the thing that has most animated people, is that the airdrop is not claimable from many jurisdictions. So these jurisdictions from which the airdrop is not claimable include, you know, the sanctioned countries, obviously, the United States, Pakistan, I don't know, where were the other places where it's not allowed?
Half the world
To claim?
Yeah,
Half the world, really?
It's a crazy. I mean, there's the usual suspects. You know, your North Korea, your Irans, your Cubas. But yeah, they got Pakistan, Myanmar, Laos, Mali, Albania. I don't know what Albania did. They're very nice people in Albania, but they're not. You can't get the airdrop. I'm sorry. Nicaragua also not on there.
Oh wow. Okay, so this is actually okay. So I have this list here: USA, Canada, Russia, UK, China, and India were all excluded, as well as those who were caught using a VPN. Wait, so who is even left in? Who's not on that list? That's like all the most populous countries.
Dubai is...
Okay, I guess Dubai's good. Places in LATAM, I guess, are good if you're not sanctioned. Okay, so that's like kind of insane. And so basically the entire internet descended on EigenLayer to basically collectively shame them, as well as collectively shame the VCs for being, I get more or less implicitly complicit in this big, gigantic clusterfuck that has become the EigenLayer token. So it's gone from being probably the most anticipated token launch of this cycle to now being the kind of public enemy number one of crypto.
I don't know how they came up with this list. Like Lebanon is also on here. And so some of these are obviously sanctioned countries, and obviously some of them are US. I think there's kind of this current meta after the CFTC settlements with Open and 0x to IP block US, block VPNs of usage of the actual protocol, which makes sense. If you don't want to be serving US users, you block those. And obviously sanctioned entities as well, or sanctioned countries as well. But this just feels kind of this like hodgepodge of countries that are maybe in some sort of gray area around the world. And it kind of goes back to this point that's been making the rounds on crypto Twitter, which is there's no IP block or VPN block to deposit into EigenLayer. Certainly, even through the front end, you can't really do it on chain, but I think most people are going through some sort of UI. But now it feels like the door is closing behind you, and actually you can't come back and get your points or get your tokens if you're from one of these countries, even though you could use the product and deposit. So in some ways, it feels like the opposite of kind of what all these on-chain derivatives and protocols are kind of doing.
So, okay, let me maybe represent the pro and con, because there's been a lot of talking heads on Twitter. The common argument against what EigenLayer did is basically what you just described, Tom, is that you were happy enough to take all of our deposits, right? The protocol itself doesn't really have a demand side yet. There aren't AVSs paying fees to the depositors. So the reason why all this capital was there was you were offering points. Everybody could get points, and all this capital was there because you were enticing them with your points program. And now all of a sudden you kind of flip the script and you say, hey, guess what? Most of you are not getting points. Also, haha, you're now, exit liquidity, quote unquote, or whatever. We've taken advantage of all of the retail investors or, investors, whatever, retail restakers, farmers who are putting their capital into EigenLayer. Okay. So now what's the opposite side? What are the people who are defending EigenLayer saying? The people who are defending EigenLayer, or maybe just not defending EigenLayer, but defending like calming down, are people who are saying like, hey, this was all free money to begin with. Nobody lost any money. Everybody who is putting their capital into EigenLayer was getting staking yield. And the people who maybe said, I didn't get enough, to be clear, a lot of people were complaining they didn't get enough of an airdrop because it was also a linear reward, meaning that the more stake you had, the more reward you had, and a 1-to-1 ratio. And so if you had $1 billion in deposits, you got some $1 billion multiplied by the points factor.
It was time weighted. So it was ether times time.
Ether over time plus amount. Right. Exactly.
Right.
And so some people are like, well, hey, this benefits the big people. I didn't get much of a yield. And the people who are saying calm down are like, well, why does this protocol owe you anything? You put your money in this protocol. You didn't lose any money. You were getting the ether staking yield. So, calm down. That seems to be the pro side. I should also say, despite the fact that we are investors, none of us were consulted on any of this. We are all tiny investors in EigenLayer, and these sorts of things, generally speaking, you don't talk to anybody about this, including because there are a lot of investors on the EigenLayer cap table who probably had no idea that any of this was happening either. So, Robert, what's your take on the whole EigenLayer debacle?
Yeah, well, I wouldn't say it's a long-term debacle. It seems like a short-term debacle to me. I think the biggest reason why people feel unhappy on the crypto Twitter is that this was, if there's ever been a points program, this has been the most marquee flagship points program of all time. It's attracted the most capital of any points program in the history of crypto points. And it is probably the barometer that like others are going to follow. And there has been some relatively bad behavior in the past with points. Some examples were people feeling misled by how Blur's seasons kept on extending and extending indefinitely, and they felt like they were getting farmed by the protocol. EigenLayer, in a lot of ways, is the lead horse, not only for points in general, but also for AVS and restaking systems in general. And I feel like they had an opportunity to lead by example. And instead, I think a lot of the community feels, as you touched on, somewhat misled in that, not only are, the terms of the airdrop different from what people expected. People expected that if they were able to participate and get points, then points would equal tokens, not points subject to half the world being blacklisted would become tokens. And secondly, the calculations, yes, to your point, seemed a little weird. Even when it was linear, the amount of points that they were dispersing, I believe, was not equal to this, although I could be mistaken. But I believe there was also changes in the actual ratio of points to tokens based on participant, based on when they participated. So points were non-linear in a algebraic way. And I think people just feel like their expectations were let down. And I wouldn't say that, no one has lost anything. There's always an opportunity cost to capital. There's always an opportunity cost to staking. There's always an opportunity cost for all those point farmers out there. And so many people were participating in EigenLayer on the expectation that points would become tokens. And there was other places for them to put their ether. There was other protocols that they could have been engaging with. EigenLayer was considered to be, the most ambitious project in a lot of ways, with the most real project, right? Not like some BS fly-by-night, copy-paste crypto protocol with points. This is probably one of the most unique and ambitious projects in the last couple of years. And so there was just so much positive goodwill going into the points program and through the points program. And I think this just let a lot of people down. And it doesn't mean it's not fixable. I think there's a lot of things they can do. No one knows what season 2 looks like. No one knows how it's going to go. And I just think there's a lingering fear in the air. There's going to be like similar to a Blur-like scenario where season 2 goes on in perpetuity and people feel like they're getting farmed in perpetuity and they get let down. But I don't necessarily think that's going to be the case. I think, there's a lot that can happen between now and when, season 2 ends and the token becomes transferable to, excite people all over again. I just think that like this was a stumble when it comes to goodwill.
Actually, I want to point out one thing. Robert, you had a tweet yesterday? That was that basically said, the points era is over. What comes next? So I feel like I think we're obligated to ask you what comes next in your opinion.
Well, I don't know what comes
next. Do you
next.
think that's because of EigenLayer? Do you think EigenLayer ended the points era?
Well, I think I'm saying this because for a few reasons. There's actually a lot baked into that tweet, and I'm like sort of making a couple statements all at once. So one is the actual EigenLayer points ending. Second is the systems built on top of EigenLayer, including your like Renzos, which Disclosure Robot Ventures is a small investor in, and other protocols, points converting to tokens. EigenLayer was this like base point system, which so much of DeFi was built around. There was all of the pendles. There was all of the derivative protocols. Everything was built on EigenLayer points. And with the culmination of EigenLayer points, it's not just the culmination of EigenLayer's points, but it's also, I think, in a lot of ways, the end of so many other economic systems that are adjacent to it and their points. And I don't think that EigenLayer's points program is ending in a way that's going to inspire a lot of excitement for other projects. I think, the next team that launches a points program is going to be met with a lot of skepticism. And so in a lot of ways, I think like the golden era of points is 100% over. I don't think the sort of meta of points will be the same. And I do think that teams are going to have to iterate on this significantly to get the same.
I will take the other side of this. It sounds like you are building in a very high learning rate into crypto retail, which I think is like just a terrible mental model. I think like right now, the market is a little exhausted. I think that people are looking for reasons to be a little upset as well. Like it's sort of a testy moment for them to also have launched their token. Like somebody mentioned that if ETH was at 6K, I don't think that people would be nearly this mad about the EigenLayer airdrop. But I agree with you. I think we're going to take a sec. People are going to reload. But I think if we see market momentum picking back up again, I think it's like right back on. It was like you could have thought that with Starkware, right? Starkware was also a kind of disaster of a launch, and then no one's even talking about it anymore. I mean, except to compare it to EigenLayer of like, oh, which was worse?
Well, I think people keep making all the Starkware has 8 users memes, and Starkware has themselves leaned into it and made marketing about how they have only 8 users. So I think I would say it probably was still a net negative because people still, if you look at the EigenLayer stuff, a lot of the critiques on Twitter just reference Starkware critiques, i.e., like Starkware staff calling all the airdrop farmers e-beggars. You see that represented in that the reference to that represented. So they're kind of used as this thing that everyone compares to for the worst case points. Yeah, I mean, just from looking at my view of crypto Twitter is like the Starkware thing kept getting referenced nonstop.
Yeah.
So I think like I don't think it's actually as not they disappeared as you were saying.
Yeah, I think in some ways it's like the EigenLayer expectations kind of mirror actually what's happening with ETH staking, where it's kind of like you said, people view it as free money, and the problem is that like there's diminishing marginal utility at a certain point of adding more capital or adding more stakers, and so it reduces the yield for everyone. Like I don't think you need $15 billion to secure something that is going to have a number of AVSs when they get started, but people view it as free money, so they keep piling more in, and that dilutes the returns for everyone else. And so similar with ETH staking right now, everyone's just like, yeah, why wouldn't I be staking? Let's go stake. And it's risk free, and I'm earning 3%, and then it's 2.5%, and then it's going to be 2%. And like the ETH Foundation, I think, has been also pretty clear about the fact that they don't want this meta of everyone staking, all the ETH being staked, because it should be something that you actively choose to participate in, and there should be maybe some risk or work involved. And I think that's been maybe the other part of sort of the points meta that I think is kind of coming to an end of, this is all free money. I don't have to do anything. I don't have to risk anything. I go and I show up and I do a little thing and I get an airdrop versus what it's supposed to be, which is compensating you for the value that you're providing to a network or a protocol or a system to get off the ground for the opportunity cost of your capital and your time and your work to go and do it. And so, I think hopefully there's just more normalization and kind of more calculus that goes into where should people's capital be placed, how much should teams actually be compensating people for. Like it just feels like right now it's just way too on one end of the spectrum.
Okay, maybe I'll capitulate a little bit and I'll say this might be the peak of the points era, but I don't think it's the end of the points era, right? In the same way that sort of EOS was like the peak of the ICO bubble, but it was not the end of the ICO bubble, right? Actually, there were a ton more ICOs after EOS.
I mean,
so
not a ton of successful large ICOs. I mean, it was the death knell, right?
Yeah,
I mean, there was still like $100 million ICOs after that.
Everything moved private after that. Like
yeah, there will still be points programs in the next couple of weeks, in the next couple of months, maybe in the next couple of years, but those points programs are going to be nowhere close to as successful as what we've seen so far. Right? That's my prediction.
Right, but also successful in a narrow sense, right? Like, I mean, they had $15 billion of staked ETH in there. But that $15 billion, I mean, we're talking about the opportunity cost of capital, right? The reality is that the opportunity cost on that staked ETH is extremely low. It's staked ETH. It's already staked, right? What else can you do with it? Like, the reality is that there aren't a lot of other places where you can get yield. There was Blast, there was basically Blast, and then there was EigenLayer, and there weren't a lot of other places that were giving you yield on. That's part of the reason why they were able to attract so much capital.
So maybe if we call this the peak of the points era, how do you think Blast will do upon conversion? Because now they're kind of the sitting chicken, right? They're kind of the last one out.
There was a very good meme that showed I think it was ZK Sync and Layer 0 just like hiding behind hiding in a hallway, like watching EigenLayer getting beaten up by people. I do think any project that's looking at this is just kind of sweating bullets right now of, oh shit, I'm next. And if I make one wrong move, like I'm just going to get crucified in the town square for not being community oriented enough or not being decentralized enough. It is a very, let me actually take it in a slightly different direction, because a lot of the animus that I saw, obviously people were mad, EigenLayer blocking, you took my money, quote unquote, whatever, everyone got all their money back, nobody lost money. But, you were willing to take my capital, which of course, the other thing that's weird about it is that the capital wasn't doing anything, right? Like there's no slashing in EigenLayer. There's no like AVSs
Correct.
that were taking the security.
It wasn't real economic activity.
Right. It was like put your money in this box and then like I'll give you points.
The SBF box.
Yeah, exactly. It was a little. Yeah. I mean, look, there's smart contract risk. There's whatever. Put money in a box risk.
I think in Pendle and Gearbox you are taking real risk, but
but EigenLayer was not telling people go put your money into Gearbox
but
or,
I'm
or
just saying,
Morpho.
like, if you looked at the distribution of where people are putting capital, the sheer
but
amount that went into
that's
the
on,
like,
that's on them, right? That's not on.
well,
on
I think that
EigenLayer.
also impacts these
It does. Net,
expectations
it
that
does.
users have, right? Because they're like,
Totally.
they're sort of rehypothecating, making the total amount used look bigger, and in the process, they expect their size to be like they expect some proportion relative to the amount of risk and leverage.
I understand that, right? The weird thing about all this,
but that's not EigenLayer's responsibility. To your point, I'm just saying that this is why I think there's this communal like anger, and why people were initially freaking out and being like, "Oh, Pendle didn't get as much as everything else," and then of course, like the Pendle market is this beautiful, like the interest rate went down 50%, it came back up almost completely reverse in 2 hours once people read the docs and the foundation put out a tweet. It was actually beautiful if you watch the Pendle chart.
Right. So, okay, I want to take this in a slightly different direction because, look, clearly EigenLayer team fucked up. They did not read the room very effectively. And we should also maybe talk about the intersubjective staking stuff, but I don't know if we're going to have time today, honestly, because like there's just so much there that I don't think we're going to have capacity to get to it. But the thing that I want to talk about that was also, it felt like a big part of the story was not just the mechanics of the airdrop and who got blocked and blah, 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 but a lot of the story was fuck VCs. And this kind of feels like, I was telling Tarun this, that like, this feels like the worst cycle to be a VC, where it's just like, even though like, yes, these are all VC projects and, I'm sure there's going to be markups for a bunch of this stuff as it's coming out. And the other thing, like, I don't really even know that well, how is Eigen going to do, right? I think it's listed on Avo, I believe. What is it trading on Avo for the futures?
Yeah, it's like 11 and 10 to $12 per
10 to 12, yeah. So 10 to 12 billion fully diluted valuation that's implied there.
No, I think it's higher. It's 16 because it's 1.67 billion tokens. So it's like,
oh, I see.
It's closer to 16 to 20.
Okay, so right now it is still trending. Even with all of this, the market's still pricing that this thing is at 16 to 20 billion. So two things that I want to
be fair though, these pre-launch markets are very illiquid. So
of course. There's not a lot.
But they are relatively
indicative.
Yes, they are relatively accurate.
Surprisingly accurate.
They're not off by an order of magnitude. They're off by like 30%.
Yeah, I've been very impressed at how accurate they've been thus far.
Yeah,
I agree. Right now,
least like launch date, like day one, like the day one price.
Give you a
okay. Tom, so you historically have been on the side of airdrops don't matter.
Yeah,
this is all like a news story that will go away in like 48 hours. These people are not your users. They're fucking farmers. They're when you're actually building your product, these people will go away anyway, and they won't be there for you. So, what is your take on this whole situation with EigenLayer? Do you stand by that? Do you say like whatever, who cares, doesn't matter?
No,
or do you say, look, they fucked up?
Yeah, I think the whole like points airdrop farming sort of blob has really people are conflating all of these things. I think when we talk about points and retroactive airdrops, it's really just liquidity mining. It's liquidity mining with some editorial tweaks to make it work. It's very different than kind of, again, like a uni-style airdrop where it's literally just, hey, here's a thank you to the community. It's not directly proportional to how much you provided. We're not trying to explicitly bootstrap this thing. Isn't teased. It's like a very different kind of thing. And I think ultimately, I was making this point for a presentation recently, is like, if you look at some of the most reviled airdrops in history, Paraswap always sort of comes to mind as like the one everyone hated. They were really aggressive filtering. They're still doing pretty fine. I think they're like 5% of DEX volume is going through Paraswap. Like, it's not great, but I don't think the airdrop necessarily hurt or helped them. I don't think their
token has ever recovered that.
No, definitely.
Tons of usage, but
for sure. But I don't think like a great airdrop would have saved the product. Similarly, a terrible airdrop, I don't think stop them from being successful. It's ultimately about the product itself. And so I don't think this is going to stop. I think obviously using tokens as a way to bootstrap a network, bootstrap a market is it's one of the key kind of killer apps of crypto, and the thing that like makes a lot of these products work. There's going to be iterations and tweaks on that the same way points were a tweak on sort of the original model of liquidity mining, but like that sort of concept isn't going to go away. And so I kind of agree that airdrops still remain kind of pointless and sort of tangential to the actual success of the product. But that doesn't mean that like, hey, you can't do liquidity mining, or you shouldn't have a token or something like that. It just feels kind of orthogonal. It's like a moment in time, and ultimately you have a marathon to run in building a successful product.
So you feel like this was a brand marketing moment they fucked it up, but whatever, you can recover from that.
Yeah, I think the only thing that they would have fucked up is I think if they did not, I mean, and maybe going back to my point is like maybe they overly incentivized, too much security to sort of start. I think this was also kind of the issue with Blur in season 1 was it was basically too much of a maker rebate. You had crossed spreads, which then caused wash trading, caused market inefficiencies. It's like an over subsidy of the market. That's kind of what we're seeing with EigenLayer right now. But ultimately, like the product still has to be successful. They've bootstrapped this sort of security budget to help these AVSs get online. It's just, hey, we're slightly miscalibrated on how much we should actually be compensating these people for.
Yeah, that is one of the things that I take away from all these is that in the moment, like we talked about this with Starkware, like when the internet is mad, it's like fucking crazy, right? Like your brain is just designed to just be in abject fear when something like this is happening. And it's hard not to feel that this is like basically a near-death experience for a project. And in reality, like it seldom is. I mean, Paraswap is one example, but Paraswap was actually never really that successful in absolute terms anyway. And you look at Starkware, like, yeah, people now joke around about, oh, Starkware was a terrible airdrop. But like the primary thing with Starkware is not the airdrop. The primary thing is like, okay, are there users? Are there applications? Are there things to do? And whether or not your airdrop is good, like these farmers are not users. They don't use these products. They are not people who are hanging out on chain.
One thing that you do need to be careful of, and I think a lot of the teams that have been in this position are now cognizant of, but maybe in 2021 was less true, is by having an unsuccessful in some metrics airdrop, you're very likely to encourage like vampire attacks and sort of competitive pressure where people say, hey, we're going to do a more fair one, we're going to do a better one, and it's just like you do.
Wait, on what basis do you say that attracts people to do vampire attacks? I mean, vampire attacks are incredibly rare.
I mean, but EigenLayer is because it's so big, is the recipient of at least one, possibly two right now, right? Like where there are people explicitly trying to court people pissed off about the points decision, and so I think you have to be a little bit careful, right? Like this was sort of the Uniswap sushi swap thing,
right? But do you really think that there's going to be a season 2? There's 10% of the token supply set aside for the season 2. EigenLayer points translate into tokens. FTV is going to be whatever,
I think the transferability billion. Is the thing you have to be a bit careful of, right? That's where you're opening yourself up for the other. Yeah,
fine. So somebody might go be faster or looser. Somebody might just straight liquidity mine and not even have points, right? They might just say, look, here's token, get token, fuck the points, intermediary. But like at the end of the day, I don't think these people are competing on TVL. Like it seems to me like the wrong theory of the case that EigenLayer versus like the EigenLayer competitor is a TVL battle, right? That feels like it's sort of a fireworks show to show people, wow, we have 15 billion in staked ETH, when like there's no slashing, there's very few AVSs, like a lot of stuff is like not fully online yet. Like right now, it's just like a big headline number that everyone is excited about and some people are mad about. I don't know. I mean, okay, so I want to go back to the VC thing because I feel like this is where I'm seeing a lot of subtweeting and like many people seem to believe that VCs are kind of complicit in whatever happened here with EigenLayer. And obviously, we're not lead investors in EigenLayer, so none of us particularly did this, but we also have our own portfolio companies that we are more involved with that have done points programs and do this kind of thing. What is your guys' take on like the pitchfork, torches coming out for the VCs in the cycle?
All I have to say is my impression of this is Hasib is very sensitive to the alignment anons like 0x Balloon Lover and Enshrined Plebs and Woodchuck and who by the way highest influence in people's minds relative to audience size, but honestly, very scathingly true and oftentimes insightful.
No, but I see it everywhere, right? You see the traders are saying it. You see like,
but the traders are usually very,
influencers.
The crypto traders, I don't feel are very honest, right? They'll like change their mind in 2 seconds and send you a ref link for something that they were shitting on a week ago, right? They're pure mercenaries.
Yeah,
but these anons not only do they have inside information in the sense of like they clearly know things that are very non-public, but they're also very curt and direct in the way that I don't think the traders are maybe either too focused on chasing yield or like looking for the next token to even bother having that level of honesty in their discussion.
Tom, what's your take on the anti-VC sentiment?
Well, as someone who's slightly biased, I mean, I think this is kind of Kobe's whole thing with Echo, which is his sort of AngelList on-chain crowdfunding platform, which I kind of agree with, which is most VCs are not super helpful. They supply capital, and in some ways they're very vampiric to their the projects they invest in. They want to have a super short lockup and then just kind of dump. They're almost kind of like a caricature of kind of the evil VC of that people on crypto Twitter sort of imagine. And I think in practice, the sort of name brand VCs that people think of that are investing in EigenLayer actually are very helpful when it comes to everything that is involved in running these kinds of companies. And the other thing is, they also have very long vesting cycles, right? For most of these tokens, you're looking at 3 to 4 years until you're fully vested. To put that in context, if you did an investment back in January 2021 when OpenSea was just kind of becoming a thing and NFTs were just kind of booming again, you still would not be fully vested. And so I think there's this sort of like image in people's mind that they like to get mad at, this sort of fake image of there's TGE, all the VCs dump on retail and they walk away with big bags of cash, and like that is very not accurate. I do think there is a real concern around VC concentration and ownership of some of these protocols and some of these tokens. But I think that's very different than the dynamics around price action and sort of short-term airdrop dynamics.
I think in the EigenLayer case specifically, some of the arguments about the terms appeared more heated than I think the reality suggests should be the case. For example, because of the non-transferability of the token combined with the fact that people on crypto Twitter read the terms as being, oh, VCs are fully vested in 3 years, nobody was sure if that started when the token was first created or when it first unlocked. And a lot of the chatter online was, I believe, incorrectly of the opinion that 3-year counter started when the token was released at the token generation event, not the transferability of the token. And so a lot of people on crypto Twitter thought the VCs were evil in this case because they said, oh, well, the VCs are going to be fully vested in 3 years. They're just going to stall transferability for as long as they possibly can, if not for a year, until the VCs hit their cliff, so that when the token is transferable, they're going to be liquid and they're going to be dumping on retail and blah, 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 blah. And I think that was where a lot of the animosity came from, was this like trying to interpret the different like timelines combined with the non-transferability of the token. I don't think the reality is going to be like that, but I think that's where some of this heat came from.
What's ironic to me is that like the implicit in the claim, and I agree with you. Actually, I don't even know what the vesting terms are on EigenLayer when the vesting timeline starts. But
I actually don't know either. By the way, like I feel like there's been like strong arguments on both, and I don't actually know.
Yeah, we actually don't know. So, but the implicit in that claim, which I saw many times on Twitter, of like farmers who are very upset that the VCs have what they perceive as being better liquidity terms than they do, which I'm pretty sure is definitely not true. That like, oh, the VCs are going to dump on retail and that's terrible. And like, how could they do this to us? When like, they're sort of assuming that, well, I'm as a farmer, I should get to dump on retail first before the VCs dump on retail, right? But like both people, like it's sort of implicit in there. It's like, no, I want to dump on retail, not you. And we're sort of assuming like retail is some other person who we're both racing to fuck faster. And I'm like, I just think like that's kind of a warped mental model of what we're doing here. Like if you think that, then like, why are you farming? Like, why are you doing any of the, why are you pointing fingers at anyone else? It's sort of like no honor among thieves kind of mindset about what you're doing, like what EigenLayer even is. Like the VCs who invest into EigenLayer do so because they believe that EigenLayer will be worth something at the end of their vesting period, which is years in the future, right? Like people invest in EigenLayer, like the seed round of EigenLayer was years ago.
Yes,
before anybody was farming it.
I believe like December. Because we invested in that, and it was
Yeah.
very
Yeah.
long
No, it was
ago.
before people even really knew, us included, like what EigenLayer would become. You know, it was
Right. The restaking term was not even coined at that time.
Yeah.
Like EigenLayer was doing something totally different at the time that you guys invested. So like the idea that, okay, well, the VCs are locked in this tug of war to dump on retail faster than you. Like that's just not how VCs think about it. Like maybe some Chinese pump and dump fund is thinking that way, but like the funds that have long-term lockups and are backing real, computer scientist types like Sriram, like think things like, Avalanche or, Optimism or Solana. These are long-term games and people are trying to like pick the thing that they think will long-term matter. Because if it doesn't, you don't get to dump on anyone.
I will say one interesting thing, and I think there's like this cultural divide here, which, every time I go to like Dubai or Singapore, I'm constantly reminded of, which is that everyone in Asia and the Middle East definitely thinks of it as the like who's the last one to sell type of game. And
100%.
They have no clue what the technology is even for. They're just kind of like, it's just a slot machine. The meme coin. Whereas like people in the US almost to a fault assume that there's not that many people like that, right? Like they must all actually read the white paper. And it's like that's not true.
That's true. Reality is somewhere in the middle.
Yeah. Going back to Kobe's point, there are a lot of shitty VCs out there. I sometimes pay attention to what's happening on secondaries desks. So they'll sort of tell you, hey, here's what people are buying and selling. And I saw something yesterday that kind of brought this image to mind. Renzo, the liquid restaking protocol on top of EigenLayer, launched their token on Monday. Today. Or was it today? Okay, it was today. So not even 24 hours later, I saw an offer come through for someone selling Renzo at a 50% discount to spot. And it kind of reminded me of like praying mantises, after they're done mating, the females bites the male's head off and throws the body away. I'm kind of getting that kind of vibe from the, early VC. Just 3 hours after launch, I'm dumping this token, and getting the fuck out. I'm hopefully we see less of this.
Well, here's the thing. I don't think we're going to see less of this. I think if you look at TradFi, okay, this is how IPOs work as well. It's entirely a structured game of who's allowed to dump when. Okay, like the entire structure, how every company goes public on the New York Stock Exchange and on the NASDAQ is like, oh, the IPO buyers have a 6-month exclusivity window to sell. And then the day after that, everyone can dump, right? And they literally go into like very specific legal structures to come up with, almost a prioritization of trading to favor the most final round of investors, which is the public investors first, right? And I actually think there's going to be like probably more experimentation with this. Like it's amazing how few structures we've seen in crypto around like liquidity and lockups and how does it work and what's fair and what's unfair and like what are the incentives and how are they aligned? Like the one thing I'll say is that like,
but we do effectively have that though, right? Like the airdrop farmers are the first to unlock. Like the VCs don't unlock until everybody who's bought it on Binance has like a year to keep trading it.
Yeah, I think a fact of life that like I think a lot of the louder people on crypto don't realize is that in traditional finance and capital formation for normal businesses, the same stuff happens. It's just actually extremely more non-transparent. You don't get the pie chart, even if the pie chart is messed up, as we saw.
Oh, that pie chart was chart crime.
That pie chart. Okay, we're gonna. All right, we're gonna ignore the pie chart. There's too much to talk about. Okay, speaking of projects and bad things happening, we should talk about the IONET drama. So IO.net is a Solana-based DePIN project that tries to create a decentralized marketplace for GPUs. They've claimed at various times that they have hundreds of thousands of GPUs, tens of thousands of GPUs. Different numbers have been thrown around at different times. Okay, so the main character, the protagonist in the story, believe it or not, is Martin Shkreli. You might remember Martin Shkreli from several years ago when he was known as PharmaBro, a very famous pharmaceutical entrepreneur who he'd cornered the market on some pharmaceutical called Daraprim, raised the prices by a lot, became quote unquote the most hated man in America, eventually was sentenced to prison for securities fraud that was actually unrelated to any of the Daraprim stuff. Eventually got out of prison and became a just general kind of internet influencer, man about town person. So Martin Shkreli was actually an early user of IONET. IONET is IONET is sort of pre-launch or pre-token, but it is launched, so you can go on the network and use the GPUs, rent them, and start using them. So Martin Shkreli started tweeting on April 24th, it's about a week ago, saying, hey, I would avoid the IONET token. Seems kind of shady. There's a 2 billion plus market cap for no reason. These H100s, which are a high-end NVIDIA GPU, cost $330 an hour. They're far cheaper elsewhere. No one has articulated why this thing needs a token. Okay, so then April 27th, a few days later, there was an incident on IONET where basically there was some kind of, it was discovered that they were spoofing huge amounts of GPUs on the network. So supposedly this network had hundreds of thousands of GPUs. In reality, it turned out many of the GPUs were fake. And so IONET launched an upgrade to require the GPUs to implement some kind of proof of work in addition to the normal heartbeat to prove that these GPUs are actually GPUs. But shipping this software upgrade caused a huge amount of GPUs to go offline, presumably because a lot of them were fake or because they couldn't upgrade their software in order to actually implement this proof of work system. Then there was some other breach where they had to implement Okta or something. I don't know. A lot of stuff happened that kind of made everything very convoluted and fuzzy. Then starting the day after this, Martin Shkreli goes on the offensive. He starts going on IONET, which claims that it has 10,000 plus GPUs, and then tries to actually just go on the network and try to rent a GPU, just a single GPU. And it turns out he cannot rent any GPUs. He basically goes on a tirade the entire day, showing that it is impossible to rent any GPU from this marketplace that claims to have 10,000 plus GPUs. And then when he does rent a GPU, he shows that the GPU was falsely labeled as being an A100 when in fact it was some other much lower end GPU that was not the thing on the tin.
There was one of my favorite interactions here was Shkreli in the midst of this tweet storm. You're talking about, hey, there's no GPUs to rent, and the founder of IONET was like, oh really? And you're trying to sort of contradict him and post these two photos, one of which was a rack full of Apple M1 Studios, which is not a GPU that people are renting, and the other picture was a picture of a single gaming PC. It was a single gaming PC with a 3090 in it and some RGB lighting.
So to be clear, this was not the founder. This was a community ambassador. This is a community ambassador for IONET.
It was deleted afterwards, but it was good.
So anyway, this became just a complete debacle where the team for the better part of the day was ignoring this, assuming that, okay, it's probably better if we just let him talk into the void and go away. And it sort of got bigger and bigger over the course. I think it was Saturday or Sunday that this started. And pretty soon, everybody was just watching this dumpster fire of this guy eviscerating probably one of the most hyped crypto AI projects out there. I mean, this token has been projected to launch on Binance. People tell me it's going to come out at 4 to 5 billion FTV. And basically the only person who's on the internet actually trying to use it is Martin Shkreli, who then just goes on to demolish it in public. He basically trawls up as well a bunch of information saying that the founder, Shadid something, was involved in a bunch of scams in the Arabic-speaking community, but there's not a lot of English translated stuff. So Martin Shkreli was literally going out there, translating these Arabic articles and posting them piece by piece on Twitter. They're just absolutely insane weekend.
So I will add one personal anecdote, which is that Token 2049.
Dude, yes.
I had a panel with Ilya from Near, so author of the Transformers article, the founder of Sahara, who is a professor at USC, and the IONET founder. And I gotta say, the difference in ability to answer the questions that were asked was quite large. That's what I would say. If you watch that video, which is probably online somewhere, you can just see the engineering answer, you get the theory answer, and then you get the kind of what is that?
The booster answer. Yeah. So apparently by the end of this tirade that Shkreli went on, he announced that a bunch of the investors in IONET are now very unhappy and trying to undo their investments, as well as apparently the Binance listing supposedly got pulled on the basis of all the stuff that Shkreli started just posting online. And Shkreli now, it seems like he's on the warpath. He basically has declared war on IONET and will do everything he can to destroy them, almost seemingly on principle that a project this egregious is going to be trading at this high of a valuation. So he was like, several times he said, like, look, if you guys were just going to try to trade at 50 million and paint yourself as a startup, I would be like, oh yeah, cool. You know, you guys have some bugs. But trying to come out and dump this on retail at 4 billion, like I have to stop you. So I don't know. This kind of seems like a weird redemption arc for Shkreli. I'm super here for it because I'm like, we need more people to just like go and use products and like describe how broken they are. I know. I feel like a lot of stuff in crypto would get corrected overnight if that just happened a lot more.
Yes, but that's why, not to go full circle back to like, you know, some of these points programs, when all it is stake an asset, get point, there's nothing that can go wrong. When a project is trying to incorrectly or through fraud or whatever say like, oh, we have this super high tech thing, like, you know, it's magical, you know, that doesn't really exist. That's where people run into problems. I think that's one of the reasons why the meta has shifted into just points and meme coins for the most part, in that not much can go wrong if all you're promising are points and meme coins.
Yeah. I mean, look, I've been fairly skeptical of the decentralized GPU marketplace story for a while. Not because I think it's not possible. Obviously, it's possible in principle, but it's just like you end up basically becoming like a tier 0.5 data center.
Well, I think there's
low quality GPUs.
There's also a verifiability problem, right? Because like it's very easy to fake that my driver looks like, you know, some particular thing, and then I'm actually using a lower power, cheaper device and giving you random numbers.
Right.
So this
is like the two chipmunks in a trench coat problem, which like, you know, how do you actually verify this is a real GPU without some kind of trust? And the answer is like, well, this is not a theoretical problem. Apparently, this is literally what happened to IONET a week ago, is they realized their quote unquote 700,000 GPUs were a bunch of, you know,
Shkreli was also claiming like at some point,
GPUs.
One of their UIs claimed they had more GPUs than AWS had H100s or something. It was like something crazy.
Yeah,
not just like a
1.7 million GPUs.
Right.
Yeah.
Oh, there was a okay. I see.
Yeah, they claimed 1.7 million GPUs, which is more than AWS, Google, Azure, and Meta combined. So, but
I think
there's also
okay. By the way, this is I think inherently a problem with a lot of the DePIN decentralized physical infrastructure networks. Is like the Sybil resistance is very hard because you kind of need like some physical device analog Sybil resistance to prove that you're not faking like either the same physical thing 20 times in different places, or you're not faking sort of identity of a thing, as in like claiming it can do so much compute, but it actually can't. And instead you just like fill in random numbers. Both of those problems are very hard. I feel like there were like there've always been a ton of startups in every hype cycle in crypto where that like want to do that. You know, I think like there are ways of doing it. The thing is, they'll always
what are the ways of doing it?
Well, one thing is like you can constantly keep doing challenges, right? So it's like as
there's like the proof of work thing that they're shipping.
Yeah, exactly. But the problem with that is like
but that doesn't prove the hardware, right? It just proves that you're willing to do this amount of proof of work.
Well, you can have some type of challenge, which, you know, for a GPU, imagine that you have, you know, the newest architecture and the previous architecture, and you know that for some benchmark there's a gap of a certain size. Now their proof of work is they have to run that, you know, that benchmark multiple.
Well, but you've got network latency, you've got jitter, you've got all this other stuff.
For sure. No, I'm not saying it's perfect, but then to increase your probability to know that that's true, you have to do more challenges. But the more challenges you do, the worse the work quality is, because they're spending more time doing the challenge solution,
random other shit. Yeah.
Right, and
and it feels like it's also easy to game, right? The moment you get a challenge, you're like, oh, turn on the actual A100 and like go rent it just in time from AWS, and then feed the challenge, and then go back to like using your gaming GPU.
Yeah, it's definitely like a very hard thing. I think like there are like I said, I think there for some small applications closer to this Helium type of thing, you can find like proof of bandwidth. Like it's very hard to fake that you're actually like sending packets in a certain direction and certain latency distributions. But it feels to me a little like it's a just so story that these networks are so easy to bootstrap and like suddenly have $4 billion FTVs.
Yeah. Even Helium ran into this, right? There were people GPS spoofing Helium to like move into vacant areas and sort of farm more. And so it's like, yeah, maybe, functionally it works and you can relay data, but like that doesn't mean you are physically in the place that you,
forget about crypto networks. This happens all the time in like Uber and DoorDash and stuff where like drivers will spoof their GPS. And so it's like, I think like that problem hasn't been solved. I think and people have to realize that when they are investing in these things is that they're not going to have the same guarantees that you think you're getting from a normal blockchain.
I think what you basically need is trusted hardware. And the newest generation of GPUs do have trusted execution environments in the GPUs.
Yeah.
But once you have that, you kind of don't need the blockchain anyway.
Yeah.
Then it's like, okay, just have a cloud provider, have GPUs with TEs, and then, game over. Like that's it. You don't need a decentralized network anymore. Because you can guarantee the privacy, you can guarantee the verifiability. You get all that more or less for free by making the same assumptions about the hardware. So anyway, kind of ridiculous, but another part another quiver in the arrow of people who say VCs ain't shit. Although luckily we were not investors on the cap table, but there were some pretty notable investors who were a part of IONET. So
look,
okay.
So I will say as one final thing is like we're investors in some centralized companies that do GPU stuff, and those are actually great businesses. They're actually they can have like hundreds of millions of dollars of revenue. And the centralized ones don't have all these problems of like, I have to care about the spoofing. They're kind of like they're getting data centers to run these things and signing contracts and stuff. So it's not that the business model isn't wrong. It's just that the like shoving a token in it and like hoping that you can verify part is the part that doesn't make sense.
Well, I think it's not getting the economy of scale and not doing the quality control, right? Like data centers, the amount of money that data centers make is directly proportional to their quality.
Yeah.
A low quality data center is a low margin business. High quality data center, high margin business.
Yeah, it's designed to be centralized and specialized, right? And high quality. That's like what makes the product itself good. Like as you take away any of those legs of the stool, the product gets bad.
And everything is about performance in AI. It's not necessarily about verifiability at this point. So it's like you're not willing to spend that much of a cost for that feature. So it doesn't quite make sense to me.
Yeah. Oh, cool. Okay. So let's move on. CZ. So CZ's trial his sentencing has just concluded. So if you recall, CZ, founder of Binance, settled $4 billion with the DOJ and CFTC for charges about money laundering and AML, sanctions violations, all that stuff. His sentencing just took place today. I think there was a betting market that guessed that he was going to be roughly on the order of 6 months to a year. Turned out the judge gave him 4 months. So very far cry from SBF. SBF, if you recall, was sentenced to 25 years. Looks like CZ is going to be out basically by end of year, presumably, if he starts his sentence soon. He's going to a minimum security prison in the Seattle area. And from everything I've read, it should be pretty chill. Apparently, he had 160 letters that were sent for his sentencing hearing that were just glowing things about how he's a great guy. He's done a lot of philanthropy, like real philanthropy, like donating to, build schools and
not effective altruism.
Effective nevertheless, but yeah, not effective altruism. And apparently he drives some kind of Honda minivan and he doesn't live very sumptuously, doesn't have fancy watches. So ironically, CZ was actually more SBF than SBF was painted as being. But if you read the stuff that they talk about, and they're like, yeah, he lives very, very simply. And if you just saw him, you would just think he's some nerd dad. So although he flies a lot, but besides that, he doesn't really spend a lot of money. It was actually very heartwarming to see the reactions of people that hey, okay, he admitted that he did wrong, and obviously the industry was in a very different place at the time that CZ was basically operating in a pure Wild West environment. But he owned up to it, faced the music, paid the biggest fine in history, and will be the richest person ever to be imprisoned in the US. So thoughts?
Well, you scooped the really good fact I was going to drop, which is that he's the richest person to ever be imprisoned in the US.
Okay.
But I do think, very clearly it's a tale of two founders. I mean, SBF was hated because he truly wrecked the lives of so many people. And almost everybody in the public thought that 25 years, I mean, this is all debatable and we're just rehashing the past, but so many people were furious that 25 years wasn't enough for the harm that SBF caused. And the reaction to CZ is 180 degrees opposite of SBF. In fact, most of the internet has been hoping that he gets, 0, and that was home confinement or like probation or whatever, right? Like he had so many people rooting for him versus SBF, which almost everyone was rooting against him. And so, I do think it's a function just of, in a lot of ways, harm done influencing public sentiment, but the public sentiment around CZ, it couldn't be more different than SBF. And so,
well, I mean, SBF didn't have anyone who came. He had so few people who came to his sentencing to even say something nice about him, right? Like,
yeah, SBF was pure evil. I mean, CZ was not. CZ obviously moved really fast and cut a lot of corners in pursuit of building a big business, right? It's like, in a lot of ways, the CZ story is extremely similar to like the Uber story, in that Uber broke the law like all over the place to build Uber. Like Travis cut a lot of corners, right? And that was the only way to get to scale as fast as he did. CZ cut a lot of corners getting to scale as fast as he did. He was way more permissive and facilitating with AML than he should have been in a regulated world. And he cut a lot of corners. And if he didn't, Binance would not be where it is today, like realistically. And, there's a spectrum of like the startups that cut corners and achieve crazy scale. Like I view it way more like Uber than I do SBF, which is way more like Bernie Madoff,
Yeah, I mean, in some ways it is a procedural violation of a somewhat more recent regulatory regime that is very US specific versus stealing retail investors' money. I think even the numbers that the DOJ trotted out in sentencing were like not very impressive. They were like $1 million, $1.1 million from Iran was like traded on Binance. It's like, okay, sure, maybe that happens. I'm sure most large banks probably have a larger number of that, given kind of the historical.
And no bank executives are ever charged.
Yeah, I think there's also obviously the other big sort of BSA violation case in my mind is BitMEX. And all those founders got probation. And so I don't quite know why. Maybe the answer is, hey, that was 2020. This was still going on through, I think, 2021, 2022. And so maybe there should have been more awareness of kind of what the laws or what the compliance requirements are. Maybe CZ's, less sympathetic a character. I don't quite know what the reasoning is as to why, he's receiving maybe the scale, receiving prison when the BitMEX founders got probation. But in the grand scheme of things, 4 months in minimum security prison is not too bad.
For one of the richest people in the world.
Yeah. I mean, I would argue that, the scale of Binance's violations were definitely bigger than BitMEX's, right? I mean, BitMEX, it's like, blah, 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 bribe regulators of the coconut, and we were not KYCing. But there's nothing in there about sanctions and Hamas and, Russian terrorist groups and blah, blah, blah. Like the scale of the damage that Binance facilitated through allowing money laundering and sanctioned entities to run through Binance over many years, like the scale of that damage is just much bigger, right? Unequivocally. And the reality is that a lot of what people pointed to of why the sentencing was so lenient was that the DOJ actually couldn't get CZ in the room where it happened. Right. So they got, Samuel Lim, the chief compliance officer, talking about, oh shit, we've got Hamas on here, but they never have any messages where CZ knows it's happening. And CZ basically, like to the end, the DOJ could not prove, because this is going after CZ personally, right? They already did the settlement with Binance. Going after CZ personally, you have to prove he knew that was happening. This is a gigantic business. He could have been insulated. He could, blah, blah, blah. And that's always what happens with the banking executives is that, yes, there were AML violations, there were sanctions, there was money laundering, there was human trafficking, whatever, but we didn't know. Somebody else was responsible for that. I didn't know, right? And it's very hard to prove that for white collar crimes. And I think the thing with this story is that they didn't have enough evidence to really clearly link him to it because of, I think, how careful he was. And that I think is a big part of the reason why the sentence is much more lenient than it would have been for Arthur Hayes, right? Arthur Hayes, probably none of that scale of stuff was really happening. It was mostly people in the US were gambling on BitMEX, but I don't think there was a scale of money laundering and all that other stuff that was happening on Binance.
But it's not like this is it's not like this is organized crime and this is a RICO case and I didn't know that there was drug dealing and prostitution, and even though it's my key income stream and a core part of my business, this would, in the ideal world, Binance could have operated without KYC, and just any bad actors, any sanctioned entities just can't sign up because you can be compliant, but they're not actual revenue drivers. They're not actual material business lines for Binance. So I think it is very feasible that maybe CZ was careful, but also he probably didn't give a shit about any of this other than looking to keep him out of jail. But it's not like it was key to the business, and that, I think, in my mind, is sort of like the other key distinction.
No, I agree with that. I mean, clearly, Binance was making most of their money from the biggest markets, which are the US, China, Europe, et cetera. So no question that all this stuff, they could have avoided all of it and probably made just as much money. And obviously now would have made much more if they didn't have to deal with all this bullshit on the tail end. But I think, the point that you made, Robert, which is that, all these banking execs have been guilty of very comparable crimes and none of them have ever been put in prison, I think is also a good point. Reality, CZ is a foreigner. He's a, Chinese guy or Canadian Chinese. And he is going to get, because of how he has also figured into the growth of the global crypto market and the story behind the collapse of FTX. I think all of that stuff has added more, energy behind the DOJ pursuing him as aggressively as they did. And the reality is that, I think CZ, if he didn't have as good of a legal defense, I think this would have ended up much worse for him. But he obviously hired the best lawyers that money can buy. As you mentioned, one of the richest people in the world, very, very powerful set of resources that he has available to him. So I think he just got the better of the DOJ. I think 4 months. At the end of the day, all that being said, I do think that, something is fair, something that's not 0. 4 months feels to me like the right amount of time, which is that, also he paid, $4 billion, yeah, exactly. 4 months, also $4 billion. Don't FUD. I guess it's all, it all comes full circle. So, but I think he will retire into a very welcome embrace in the crypto community as being like this elder statesman. I'm sure at this point, he's not looking to start any more businesses and, kind of enjoy his Honda Civic lifestyle or whatever, however he chooses to spend his many, many riches. Anyway, yeah, I think we have to wrap. Unfortunately, there was a lot of other stuff that happened, but maybe we'll get around to it next time. But until then, see you, everybody.